JB here. August 20th, 2021. Just going to be really quick. We have 15 minutes to the open. Just, of course, this week has been a chop fest, or at least for me. Looking to get in the Peloton to start a week. That faded, closed them out. They went up to go over a double. And then Peloton's kind of been sitting here this entire week up till, I think it hit 113 on Wednesday. Let's see if I pull it back. Then 110 yesterday, or 109, sitting here at 108.75. An analyst upgraded the stock $20 this morning, MKM Partners, ahead of their earnings, which will be next Thursday. I think it offers a decent risk reward, at least to play into next week. So I put on the watch list this morning. I'm a little wary of holding some things over the weekend just because the way the market's been acting. I mean, the S&P is only down 1% so far this week. Same with the NASDAQ, 1.3%. But you have to think as earnings start to wind down. A lot of these companies reported monster results. You have to start thinking the market's going to maybe start to price in, earnings that are not going to be as outstanding in the fall. And, I keep using the word peak earnings. So I think that's going to be a term that's going to be used in the coming months. So at least based on what happened with the supply-demand dynamic and all the things with this transitory inflation, blah, blah, blah. Not only that, we have Jackson Hole coming at the end of not this coming up week, but the following week, Thursday, Friday, Saturday. You have to think Powell's probably going to talk on that Friday. I think it's August 28th or 27th. So those are some of the reasons why I just a little cautious into this weekend. So Peloton will be one. If I do add something into the weekend, that would be it. Illumina, I believe is how you pronounce it. One of those genome sequencing companies where you send blood tests and they can detect cancer and things like that. They used to have a company called, I guess it's called Grail, and then they spun it off for like $1 billion, and then they went back and tried to acquire it last year, or maybe it's this year, for $7 or $8 billion. So it was kind of, a lot of folks thought they overpaid for it. The stock sold off, and then it bounced back. And then you have FTC concerns. So FTC is wondering if it's, they're going to allow it to close the deal based on monopoly concerns, things like that. And then you still have the EU, who's kind of weighing in on that as well. So in light of waiting, in lieu of waiting for those authorities to approve the transaction, Illumina just announced that they completed the transaction, and they're going to kind of keep that asset on the side. I guess if it doesn't get approved, then they can just, shed it off. I don't know how that works, but what it does, it kind of opens a door of scrutiny, right? Because most analysts and folks, you want clarity and certainty. You don't want to have expose your company to undue risks, which would be a fine, right? Right off the bat, they're probably going to get fined from the EU just because they approved the deal without the EU's approval. So it kind of opens the door. So you saw it sell off. I think it was down over 10%, or no, maybe it was 8% at times, then bounced all the way down to 460. And then the end of the day, I think it was between 3 o'clock and close, and went from 460 to 475. Could be a decent lotto. The premium's kind of expensive. Bid ask is tough, but that's the name I'll be watching today. Wix, sure enough, while I'm watching everything else, Wix finally, after I think it hit 199 at the open, and then just went on a crazy run all the way up to almost hit 220 before closing at 216.45. It was mid-morning, and then I start to look. I said, wow, this thing's breaking out. It might have been at like 209 or something like that. And then I look at the calls. I'm like, oh, the 220s are 20 by 30. So then I go to look to see if I can get it, put an order in, and I'm like, oh, wait, those are the 230s. So it was tough for me to wrap my head around the stock going up another $20 with only a day and a half left until expiration. So I passed on them. Sure enough, what happens, by the time I look at 30 minutes later, they're already a double. And I think they went all the way up to $1.20. But I might revisit the 220s today if it kind of finds support around 216, 217 this morning. So that's Wix. Just one of those names that's pinching. The chart's setting up. It's had a tremendous fall from its highs. The company kind of hit the reset button on their guidance. And I think now it probably puts the floor in at $200 going forward, and then maybe can find a nice bounce. So that's that. S&P, I talk about that 50-day moving average has been strong support over the last, pretty much the entire 2021. So that'll be a spot. If we break through that, that's where I'll be looking for some puts. Back in July, I had Visa puts. Maybe I had like the 225s. The stock was at 240. Sure enough, what does Visa do? I think it went all the way down to 223 yesterday. Same with MasterCard, at 228. Those are two names that not that I struggle with the valuations so much as I think they're just an opportunity to play for downside if the market pulls back. I've went on these rants many times over the years where I think these third-party processors are that's the next area of disruption. It's already being disrupted. I just don't know how Visa, MasterCard exist in their current format without trying to scale out in different venues, whether it be other cryptocurrencies and things like that. And they are, and Visa, MasterCard have kind of wet their toes in that. But at some point, these third-party processors that charge, companies, when you can get the same, you can save costs on the processor because a customer can just use, could do a transaction that doesn't have that middleman fee. It's just, why do Visa, MasterCard exist? Besides, of course, like settlement and all that. So I get that, takes the risk out of the transaction. But, yeah. So at some point, that would be kind of the thought process on adding some speculative puts on those if we break the 50-day moving average. And then in the cloud space, and Team has been on a crazy run since its earnings. The premiums always seem very inexpensive on that name. So that's one of the names I always look at, because when you can get inexpensive puts and then the stock sells off, not because it's a bad growth story, but because the overall market sells off, you can make some nice coins. So that's kind of the thought process on those as possible put plays, especially if we make break under that 50-day moving average. I think it's 333 right now on the SPY. 433, excuse me, which is a long way off. Put it on MarketWatch had a great piece this morning in regards to the longest trading amount of trading days between pullbacks of 5% or more. There's 200 trading days so far without a 5% pullback, which is pretty remarkable. And then you wonder why everybody's so somewhat complacent, I guess you would say, because here we are this week. We have a 1% pullback on the NASDAQ and the S&P, and it feels like we had a huge crash when it's really not the case. Some of it's probably tied into those sell-off in the China ADRs. You have all these headlines around regulations that the China government's going to put in place. They did it with the online education. Now you're talking about they had with gaming. And it's probably just going to continue. I think Tencent had comments out yesterday where they think this is just kind of the tip of the iceberg in regard to what the regulation is going to be in China. What does that do for these stocks? I've never been the biggest Baidu bull. I've done my rants on that. But at the same token, look down here. At some point, that thing's going to start to bounce. Baba's up nice in the pre-market. Baidu's actually not pinching here. It's down to 140. So it's the irony here. It's only to November lows from last year. So it's not even like Baidu's multi-year lows. We'll have to see how that. At some point, that's going to have a decent bounce. That's on the weekly chart, FYI. I think that's it. Oh, some other names, of course, the JYNT, Heska, a Boston Beer, which surprisingly broke under the 600 handle. We'll see if you can get back over $600. I might look for some 610s today, just because at some point it's going to have a decent bounce. Maybe it's a $500, $400 stock in the coming weeks and months. But I think there's an opportunity, especially with the options expiring today, to play that for upside. Which are the other ones that I was looking at? The JYNT. Oh, SMG. So SMG followed up its squeeze. I wouldn't call it squeeze. It was up 3 or 4% on Wednesday, and then it followed up yesterday with a dud of a session. So pretty much what it would do is tease you into getting some calls and then just kill the premiums the next day. Why do I have this on the weekly? Because, so it was down like 0.5%. So I don't know if that was just a little blip on Wednesday or if it's the start of a bottoming process. Same with EXPI. Both those names seem to, hopefully they're finding a bottom. The 50-day and 200 moving day average on EXPI is right at pretty much that 39.40 handle. So, if that holds there, maybe that's a constructive bottom. So those are some of the names I'm watching. I'll try and get back on the audio later. We have 5 minutes to open. I'll be back. Let's have a great day. Rock and roll.